The Nasdaq hitting another all-time high today as Apple, Amazon, and Microsoft each close in on a $2 trillion market cap. So, who gets there first? Chartmaster is here to tell us. Carter, what do you say?
Well, for starters, nobody knows. But let's try. Let's look at them as great athletes. Whom do we give the ball for this mission? Let's go with just who's performing best. One of four charts. Take a look at the first one. It's a simple comparative chart, and what we have is a one-year performance. And you see, of course, Amazon versus Microsoft versus Apple. And Amazon is basically double the performance of Microsoft, which in turn is better than Apple. All right, how about 5 years? That's the first one. Second chart, 10 years. Look at Amazon versus Apple versus Microsoft. Here, too, you've got Amazon leading the way. Amazon is also, of course, up year-to-date more than the other two. Now, third, how about Amazon since its IPO? Of course, we know Apple and Microsoft have more price history, but if we looked at all three of them going back to 1997, you can't even see the other two lines. In fact, and this is very humbling for all of us, $10,000 invested in May of 1997 in Amazon is worth $32 million. So, the final chart. This is the chart of Amazon, and I've got several annotations here, so let's study it a bit. You see those flat lines, three of them. Amazon has had three distinct periods where it traded sideways and then broke out. The first is the 07-09 period, and then a big breakout. You see the second instance where it trades sideways from 2013 to 2015 and breaks out. And then, of course, this most recent instance where it was basically fallow from 2018 to 2020 and broke out. And after each breakout, you'll see there on the chart the percentage gain from the 07-09 breakout to 13-15. That was a 4-year move, up 315%. Then you get another 4-year move. All you have to do, not that that's such a small effort, but is advance 25% from here, and you can see where that's drawn. That would take you to around $4,000 a share, which would be the $2 trillion mark. So, of these three, it's anybody's guess. It's a horse race. My guess, I'm betting on Amazon.
So, technically, Carter, the beginning of this new move higher started when? So we know how long it might last?
Right. I mean, that's just it. If it were to be 2 and 3 years after a consolidation and a breakout, you can 3 trillion, 4 trillion, I mean, you're as high as the imagination will allow. But what we know is this breakout is only underway in the past 6 months.
Ah, okay. Carter, thank you. We'll see you later on Options Action. Let's trade this one. Bonawyn, do you like Amazon as much as Carter does?
I think I like it a little bit more.
Wow.
Listen, there's an old adage that says follow the cash. And to be honest, you can close your eyes and pick any three of these companies. 67 billion, 19 billion, 43 billion. That's the free cash flow spit off of each of those businesses respectively. So I don't think you can really go wrong. What I will say is that Amazon is still younger and emerging, and I think there's still room for growth and innovation there, and that's why it's the winner for me.
Guy?
So they're all at like 1.6 trillion, give or take. So they're all right there. They're neck and neck as we hit the clubhouse turn, Mel, to do a horse racing theme. I'll go with Microsoft, though, and this is one I think we've been pretty steadfast on. You know, I know Azure growth slowed, but it's still ridiculous growth. Wedbush just raised their price target, I think, to 280. They report, I think, on July 22nd. I think out of the three of them, Microsoft's going to be the first to get there.
Dan?
Yeah, I suspect it's Amazon, but not from this price right here. And I think it's important to go back and look. When they reported their Q1 results back on April 30th, they had an operating income guidance from a loss of $1.5 billion to a gain of $1.5 billion. That was far worse than expected, and I think investors were disappointed. Stock sold off 7% the next day. It was trading at 2,400. Well, it's 3,200 today. I think a lot of good news is in the stock. I would expect the company to actually probably guide lower on the operating income again as they deal with this new set of demands dealing with the pandemic. So to me, I think Amazon has an amazing future ahead of it. It just can't grow to the sky. It's up 15% or 16% this month alone already.
Or maybe the context of a guide lower is different this time around because so many companies can't guide on anything. Tim?
Yeah, I think that's fair. By the way, this is one of the great would you rather rathers, whether we're going to label it that or not.
I was waiting for somebody to bring that up.
Three big horse. Well, you know, it usually has to be me, and again, it was tonight. But I would agree that Amazon has the most ability to really fight off any valuation challenge, because that's always been something that, you know, and I've said it, it's been a joke. It doesn't matter. I think Amazon is probably the one that also, because of the business units and because of the ability to really almost be recreating how we're doing business in e-commerce, I like that. I think with Apple, as much as I think Apple is probably the most secure owner of all the three, I do worry that they pulled forward so much good news on 5G and on services in the short to medium term. But as an investor, that's the one I would want to own.